and how it affects the markets is very ubiquitous amongst all asset classes, and you can utilize this information to help you make good trades. Like for example, today I was able to take advantage of a piece of news that came out regarding the U.S. and China trade negotiations and how the majority of people in the markets are perceiving that a December trade negotiation or a December deadline for phase one negotiation is not going to be met, and that it's going to be pushed until sometime in 2020. Because of that, we saw a big push in the markets from the stock market in terms of the S&P 500 falling off, and that caused things such as like gold to rally. It caused dollar yen to sell off, which is another push into safe haven. The Japanese yen rallying because it's a safe haven currency, gold rallying because it's a safe haven commodity, and the bond market rallying because it's a fixed income asset that tends to rally inversely correlated with the drops in the stock market. So that's how we utilize risk on, risk off sentiment across multiple asset classes to help us understand positionings. And I myself, I'm more of like a news trader. So I take advantage of news and events that gets dropped throughout the day and has a large impact on the markets, right? So these types of things really drive the markets, and it makes it very exciting. Just a couple hours ago, we had a big piece of news coming out of the U.S. House of Senate where they've passed a bill supporting Hong Kong and the Hong Kong protesters. And that in itself is kind of perceived as undermining the U.S. and Chinese trade negotiations because it seems like the U.S. is now taking sides of Chinese protesters, or sorry, Hong Kong protesters, and that is being perceived as bad for the markets, right? So like markets such as like stocks, S&P 500 futures market dropped, forex market products such as like dollar yen are falling off. Gold is catching a nice bid, and the bond market is catching a nice bid. And we'll show you what the risk on, risk off sentiment indicators from Ghost Squawk is saying about all the headlines that's being dropped in the markets in a moment. So yeah, I mean, I guess we'll leave it at that, and then we'll just move on. I'll let Daniel take over for now.
Okay, cool. So,
unless somebody's got any questions. Does anybody have any questions about today's event and how it affected the markets before Daniel takes over?
Nope.
So I know this is probably a lot of stuff coming at you guys, especially the people who are new. So don't worry if it didn't stick at first, because these are concepts that you're going to be following and that we're going to be reinforcing throughout the whole course. Today, I just wanted to focus on the very, very basics and fundamentals of trading, which is risk on and risk off, the risk sentiment. What does that mean, and what does it mean for your trades? And also, I'm obviously going to do that through a tool that I wrote myself to help us ascertain that. So, okay, so first of all, I call this tool Ghost Squawk, and there's a couple of reasons for that. It's kind of like a little joke because this basically started as a service that we used to trade internally, and it just ran as a desktop app. But then if you want to go trade with a buddy or somebody else wants to use it, then you got to give them the app. It was just something I wrote myself in my house, so I just decided to put it as a website. But okay, what is it? It's basically a news aggregation service, and this is where the term squawk comes into play, because there are services that read you the news. And before I really focus on those, we should kind of mention that typically trading-based news services are very, very expensive. Reuters, for example, I believe starts at 800 or 900 US per month, can go up to 18. Bloomberg is like $3,000 a month. And even the more inexpensive ones, they're still like 150 bucks a month. They start there. And that's with a lot of stripped down features that you would normally find in like a Bloomberg or Reuters. So what I did is I have an extensive background in programming and machine learning and all that. So I basically just took the time to sit there and go through the hard work to grab all the news myself from every venue that I could and aggregate it into a common source. And I just did that for me, right? So that I would have the up-to-date news, and obviously Chen as well. and that we wouldn't have to pay, you know, $3,000 a month for something like that. So it evolved to the point where, again, my background is machine learning, so I was able to apply those concepts and those principles to give us a feeling for the risk on or risk off sentiment. Okay, and I call that the risk sentiment indicator. We'll get a little bit more in depth into that specific indicator and what it means, because that's basically the backbone of this course. So if you understand risk sentiment in the markets and you understand how to gauge it, you're guaranteed you'll be a successful trader. But the path to getting there is not quite so clement, right? It's not quite so clear cut, and there are a lot of caveats. It's a very, very complex topic to deal with. It's a very complex topic to learn. And it's a complex topic to teach, right? So I made this indicator as a way to kind of give everybody a leg up and everybody a heads up as to what the risk sentiment is in the markets. Additionally, we have proprietary technical trading indicators. If you subscribe to the service, I'll be more than happy to give you those on TradingView. And I'll have separate courses. These are my own technical trading indicators that I've done myself. They're apart from the sentiment indicator. Again, we'll have separate courses on how to use those. And of course, we have the educational content. So every course that we teach to you is going to be available in the service. So in particular, what I wanted to focus on today is the Ghost Squawk news and the Ghost Squawk sentiment. So what the Ghost Squawk news gives you is headlines in real time. So again, as a trader, your job is to make sure that you keep abreast of the news that's coming out. You know, Chen mentioned some great examples of things that happened today that we were able to take advantage of, or we were able to catch with the news service that I've created. And these are gathered from a variety of sources. They include the common news sources, RSS feeds, and Twitter. A lot of the news these days is disseminated on Twitter first, so we're able to keep on top of that with this service. And of course, as I mentioned before, we have this thing called the risk sentiment analysis. So what is risk sentiment and why should I care? Well, basically, any investment is driven by investors' appetite for risk, okay? And there are basically three modes of risk sentiment, right? We have risk on, in which like the emoticons.
yeah, the emoticons.
So the risk on basically says that investors feel that given a certain amount of risk, that they can get a reward that warrants that, right? So whatever they feel that they can put up as something that they could lose, that whatever they could gain makes sense to do that, okay? And there are certain assets that we consider to be risk on. I'll get to that in the next slide. Conversely, risk off is when the markets are crazy, you don't know what's going on, there's a lot of volatility or whatever. That's called risk off, when you're too scared to put your money into something that is otherwise risky. And then finally, we have neutral. And each of these three modes has a different kind of trading style associated with it, or a different method or action upon which you can implement to take advantage of that risk sentiment. Now, what I call it risk sentiment, but it's basically an indication of the tone of the markets. Okay, it's very important to understand, and I understand that there's a lot coming at you, especially for the new people. But again, don't worry, because we're going to be revisiting these topics over and over and over in the course, and even in this presentation. And I'll be giving lots of examples about that. So this, I just want to give a basic overview, because with risk and the type of assets that like risk, you know, there's various currencies and various, you know, a lot of details we can get into, but just take it to heart that different securities react differently to risk on and risk off environments. For example, with risk on sentiment, stocks typically rally and bonds typically fall, right? Now, the converse is also true. So when we have a risk off environment, the opposite is true. So stocks fall and bonds rally. And the reason for that is when we're in a risk on environment, stocks are typically considered a riskier product, which means that sure, you could lose. However, in the right environment, you could also gain, right? You could also make a profit that is worth the risk that you take up front when you enter a position in stocks. And conversely, with bonds, this is what we call a safe haven asset, which means that if the markets are going crazy and we have political unrest or whatever it is that is contributing to that risk off sentiment, bonds are going to enjoy that, right? Because investors are going to take their money from those riskier assets and put them into the safe havens. So does that make sense, what I just said? I mean, I know I'm throwing a lot of stuff at you, but is there any questions so far? So far, so good?
Yes, so far so good.
All right, cool. So what I bring to the table with the Ghost Squawk risk sentiment, it's a proprietary machine learning algorithm. Again, that's my specialty, in particular, natural language processing in addition to trading. And so basically I collected thousands of real examples of these examples of risk on versus risk off headlines, right? And it's very difficult. This is why in quantitative finance, you typically have a big divide, right? You have the people who are traders and the people who are programmers, and there is very little overlap in between. But this is what kind of I bring to the table. And this is a proprietary measurement that you won't find anywhere else. So it evaluates risk on versus risk off sentiment in real time. So that means as the headlines are coming out, you're getting a measurement on the overall tone of the markets, again, in real time. And it's a very valuable tool because especially as you're starting to learn and you're starting to, get a feel for what these headlines mean and how to rate them yourself, this is a tool that's going to be able to help you get a leg up on the markets a lot. Okay, so next we're going to take a look at some actual examples. As I said, I just finished this and it was literally just done like an hour ago. So a lot of these examples, you're going to be looking at like some debug versions. It's not really like very pretty looking, but it does the job, right? At the end of the day, you just care about making money, right? Any questions so far? Right, Chen?
I think everybody here is on the same boat.
Yeah,
we're all
exactly.
here to make money, right?
Yeah, exactly. Yeah, I'm not going to bullshit anybody. This isn't the fanciest, prettiest tool, but it fucking works. Okay, so that's all we care about. So, all right. So this is an actual example from the 11th, and we'll be seeing the actual graphics and charts of this. But just suffice it to summarize, we were risk on in the morning. And then as the market progressed, we were, the tone changed and we turned to risk off. Okay, so the asset that we're looking at is going to be a futures contract on the S&P 500. And the symbol for that is ES. And this is a very ubiquitous symbol in trading. If you ever hear anybody say ES, or on Twitter, there might be a $ ES or $SPY, they're talking about the S&P 500. Or various contracts that follow that. For example, futures, the futures contract again is ES. So just to take a look at the Ghost Squawk, this is basically what it looks like. Again, nothing pretty, I'm not gonna lie to you. But what we would like to identify, let me see if I can use this draw tool here. I know annotates, let's see. Chen was just talking to me about this. I was just using my cursor like an idiot, waving it around frantically and hoping you guys would understand. Okay, draw, here we go. Oh, awesome. Okay, cool. Let me make that a little better. That wasn't so good. There we go. All right, so we have risk on over here at 17 and risk off over here at 11 and neutral at 21. Let me tell you a little bit about what those numbers mean. You have a total of 49, actually 50, but it only, there's a bug, I have to fix that. It takes into account only 49 titles, but you get the idea. Basically, it's evaluating every single one of these headlines that you see here. So each one of these headlines is something that we bring in with the news service, right? And each of those goes into the basically the queue, and it evaluates each and every one of these individually and gives you a metric as to the total. Oops. So we have like 17. My cursor just disappeared. That's not good. Okay. Risk on is there's 17 of them. Risk off there's 11, and of course neutral we have 21. What that translates to, remember, as we discussed with stocks, the riskier assets are considered risk on, right? Because when investors feel that they get their bang for their buck, so to speak, then they're going to put their money into those assets, right? So we see correspondingly the S&P rally. Conversely, later on in the day, as we see with the timestamp, this is around 4. This is just after the close. Note that the futures markets do not obey the same closing hours that the stock markets do. The stock markets typically close at 4, assuming we don't have like a market half day. But typically they close at 4, whereas the futures markets stay open until 6, right? And so then they have a brief closing, and then they pick up afterwards. It also depends on the product you're dealing with. So it's a little bit more complicated than just the standard New York Stock Exchange hours. But so the point is, at 4:17, we have a reversal in the risk sentiment, and how that corresponds. We see a corresponding decline in the stock market. It's not much, but we also have to take into account the fact that this is after hours, right? So even though the futures markets are still open, we have a decline in volume, as you can see here on the bottom. There's right where that downward arrow is. There's the volume dries up precipitously, right? So we have to take all those things into account. However, the main point here is that is as to how the risk sentiment change affected this product. So questions so far? Sounds good. All right, cool. Neutral markets. This is when risk on and risk off sentiment is roughly balanced. This can be an indication as to us to either avoid trading entirely or to trade the range. What do I mean by the range? We'll see that in a second. So this is another example from today, actually, where we started off neutral. We had a burst of risk on sentiment. Chen told you a little bit about what that was specifically earlier in the session. And then we ended modestly risk on. Okay, so the assets that we're going to take a look at as an example to illustrate this is the S&P 500, which has, again, the symbol ES. This is the same product we checked out in the previous example. And we have futures on the 10-year Treasury note, which has a symbol ZN. This is a product that Chen and I really like to trade. It's a product that I've been trading for several years now. So you're seeing basically the two of the most popular products to trade in this example. And this, if we want to get into specifics, you will see this in market profile. This is a module that is a component of the course that we offer, either taught by me or Chen. But there are different day types that characterize market behavior. Right, one of those is called the double distribution day, and I'll get to why that is in a second. Of course, there are many more, but it's just to kind of give you a taste of the things that you're going to hopefully be seeing when you sign up for the course. So again, going back to these, the Ghost Squawk output, we see risk on is 16, risk off is 15. So we're basically a 1 article difference. So basically that's saying we're dead even, right? And when you look at what ZN is doing with the little red box here, it's basically maintaining the range. It doesn't really know what it's going to do. Also, the timestamp is 7:26 a.m. That's like 2 hours before the American Open. So as you see down below, correspondingly on the bottom, we have the volume is very paltry when you consider what happens later on in the session, it really picks up. So this is very typical behavior for a risk neutral environment and for the time of the day, right? Does that all make sense so far? All right, cool. Correspondingly, we have, let's see. Okay, cool. So we have the same behavior, right, in the ES, right, the S&P 500. And the reason for that is they even though they're anti-correlated in how they react to risk on, risk off sentiment. We have no risk on, risk off sentiment whatsoever. At least it's it kind of cancels each other out. It's neutral, right? So both of them are expected to behave this way. And again, just take into account the fact that we have very little volume here, almost nothing, especially when you take into account, notice this happens around 9:30. What does that correspond with? That corresponds with the US Open. So when the stock market opens, you see, I call it the Hungry Hungry Hippos game. It's like, if you guys remember, anybody here is 90s kids, you had this game called Hungry Hungry Hippos. You basically smashed on the little thing until the hippo ate all the pellets. And that's basically how I kind of like view the stock market open. It's just this frenzy in the morning. So you see this huge, this little spike here. And that's basically what that corresponds to. So later, so dark, put on all that. So we have later, we have the risk sentiment basically changes, right? We have the risk off sentiment picks up precipitously. And, you could gauge this in different ways. So right now, I don't have like a little meter for it or anything. We're basically just looking at a raw output of the quantity of articles that are considered risk on versus the quantity of articles that are considered risk off. So when we have something like 8, a difference of 8, that's considered formidable, right? Because remember, we're only dealing with a total of 50. Okay, so we can safely say that we have a distinct change in the risk sentiment, right? And we're going to see how that manifests, right? So we have over here, remember, ZN or the bond products really thrive in a risk off environment, right? So when we see that sentiment change, and again, Shen mentioned why that. Go ahead.
Hey, you can stop right now. We just had a breaking headline that's moving markets, and the updated Ghost Squawk is showing you an even better example right now.
Oh, you want to switch screens?
Yeah, if you want to, like, I can chime in for a second, like just to build on what you're saying, because as of now, like a headline just broke out that says that Chinese.
Let's see.
Yeah, okay. I just wanted to showcase this, guys, really quickly, because a headline just got dropped in the market, and it's moving the markets right now. So the headline was just basically this right here. So they are these following headlines related to trade. So I'm just gonna highlight them very quickly. For example, this one right here. This one right here, where they're discussing the challenges of trade, right? And is leaning a little bit more towards the optimistic side, right? And we can see right now, because the futures markets are trading 24/7, you can see that there's been an immediate reaction in the market. So let's just remove this, and I'm going to show you some charts right now. So these here represent the charts that I like to look at. Just very quickly, I'll give you guys a very quick rundown on this. The top left chart here you see is the S&P 500 futures index, which Daniel was showing earlier. The top right over here is a 10-year U.S. Treasury note. Let me get that back on a 3-minute here. The bottom right here is gold. So if any of you guys are a gold bug, risk on, risk off also applies to the gold and commodities market, as well as dollar yen. So if anybody is a forex trader, you can also see here that there's a very strong and distinct relationship on how these markets react to news and headlines. So you can see here, the piece of news that just came out a few minutes ago was fairly optimistic for the stock market in terms of its interpretation, and you can see that the stock market is moving higher. Dollar yen, a forex product for currency traders, You can see that the dollar is trading higher against the Japanese yen. And then over here on gold and bonds, you can see gold is selling off of that headline, as well as the bond market is selling off of that headline. All right. So if you guys don't have any questions, I'm just gonna pass that on over to Daniel so he can continue on with what he's trying to cover. But yeah, I mean, it's a real
Sounds
live
good, buddy.
example that just happened very quickly. So I just wanted to pass that over to Daniel. Sorry, I just wanted to share that with you guys before I pass it over to Daniel.
Okay, can you guys see my screen now? Whoops, let's see. This
Yeah.
is back here. Okay, so again, we're just looking at examples. Like we just got one breaking in real time, but what we're looking at now is the is a recap of actually today's trading, right? So we have this again. We take a look at the risk off sentiment is increasing, and again, because bonds tend to like risk off environments, we see this nice little rally here. Correspondingly, guess what happens with stocks? Remember, we discussed how stocks and bonds deal with risk, right? And they handle it inversely, right? They're inversely correlated in that sense. So when we see the risk sentiment decline or the risk off sentiment increase, we have this huge decline in stocks that you see here. Okay, so does that make sense so far? We're basically just discussing how this indicator tells you about the sentiment in the markets, this thing called risk, and how the products deal with that. So later on, right around 2 or so, risk on sentiment picks up a little bit. We don't really have, I wouldn't say it's in the module I said it was modest, right? Because we only have 4 more headlines that are risk on than risk off. And we see how that manifests in that we have this tiny little drop here in the ZN, right? Similarly, we have this tiny little rally here in the ES or the S&P, the S&P 500 index. And it's because it's like, okay, it's a little bit better, but not quite. And this distribution here, if you notice, we have a concentration of price action right up here in the beginning of the day. And then we have this huge precipitous decline and a concentration of value here right around 3100 or maybe 3092 or so. And that's called a double distribution day, right? Because if you think about it, the values are distributed right here at the top and right here at the bottom with this huge space in between. And there's a lot of ways that we could use that in trading, right? And particularly when we discuss how to draw levels, which was actually our last class, our last Wednesday class. We discussed how to basically draw levels via Fibonacci sequences and the Fibonacci retracement tool. And these are going to direct your trades. If you can understand the type of day that you're going to have, you can basically understand the levels when to get in and out of that trade. So this is very, very important information and something that we're going to be covering here in the course over and over again. So if this material is flying at you very quickly, don't worry, because we're going to revisit it. And that's pretty much it for this. So I don't know, Chen, did you want to go over some more examples in the charts or?
No, I think that's pretty good. I mean, like we showed some examples. I mean, risk on and risk off. It's a very powerful tool used by like institutional funds, like hedge funds, banks, and whatnot, to assess relative risk in the markets. And they basically use the risk assessments to help them begin taking trades towards any particular asset class, whether it be stocks, bonds, forex, or commodities. Risk on and risk off analysis has very strong correlations between other asset classes, and they can be used to help you trade an individual product or an individual asset based upon your understanding of that. And so, we cover a lot of this stuff in the 12-week trading program. And having tools like this, like the Ghost Squawk, just further enhances our analysis and our understanding of what's going on in the market in terms of sentiment and how we can utilize it to position ourselves. So, examples like this, they happen all the time. Like even real time, as you just saw just now, when we get like dropping headlines that hit anytime during the day, they will move markets, and your understanding of that leads to opportunities where you can take advantage of, right? So
So
it's
one thing that I did want to cover really quickly before we conclude is that there is a feature that I built in that this is what we call the Squawk feature, where it actually reads the headlines to you as they break. Okay, so I have it muted here just so it doesn't talk over me, but basically I use the API from the web browser so that there's a function where it basically will read it as a robot voice. So every time, the point is that every time you have a breaking headline, this thing will read it to you. Okay, so part of what Chen was saying, even though he obviously had it muted as well, or at least we couldn't hear it, was that when these headlines break, you want to be aware of them. Okay, so that was a very, very important headline that, as we saw right here in this lecture, move the markets. And so we want to be aware of it. So if we were able to, if we had the squawk option on, you could be in your kitchen or whatever, and you'd be hearing the squawk. But if you want it quiet and just to basically have the headlines come in as I have it here, you basically just put mute on, and then it just puts in the headlines. And obviously the red means that that's something new. So that's basically
yeah.
that.
Well, why don't you explain some of the other functions at the top there?
Okay, so obviously profile, login, and log out. If you want to contact us, the about, that's just a little bit of our story. We began basically just what I've discussed here, but I think, most importantly, there's the educational segment, right? So what this is basically a summary of the entire course. Right, so we have all of our modules on here, and you could basically progress through them at your own pace, and that's pretty much it.
Yeah, perfect.
So currently we do have this functionality, but as I said, in the future, what we're going to do is integrate the Discord into GhostSquawk and integrate the Zoom capabilities into GhostSquawk. So basically, you have your entire course material, you have your social component, and you have your lecture component all in one spot. And another thing I'm working on is getting the breaking news. So this is kind of in the middle of the night, so we didn't have any important data. Whoops. Huh. So we, I don't know if you guys heard it, but basically it squawked this headline. But we also have breaking news, right? So another component of your job as a trader is to keep abreast of the data points that are coming out. There are certain market moving indicators, PMI, CPI, and they measure different things in the markets, and you trade them in very different ways. So one of the things we want to have in the near future is a way to communicate those to you when they break, right? Because these are very, very market moving indicators. So that's just a little bit of a sneak peek at what's on the roadmap for development.
Perfect. Do you guys have any questions for us with regards to the Ghost Squawk, with regards to risk on, risk off trading, who we are, some of the programs that we have, or some of the other stuff that we offer? Do you guys have any questions you want us to address at all as a group? You can ask us now. If not, we're gonna always keep in touch. You have our contact information. You can always reach out to us. So, does anybody have anything they want to ask? No. So okay. So it seems like we don't have any questions. So do you just want to wrap it up from here then?
I guess so. We do these little segments every Wednesday. Basically, we try to introduce a de facto topic. If you're part of the course, obviously you're going to get a lot more in-depth material than that. But it's basically just something to kind of garner interest in our products and in our courses. So if you know anybody who would be interested in just chiming in for an impromptu course like this, it's every Wednesday at this time. So just keep that in mind.
Yeah, so I guess the next week we'll probably be doing another topic related to correlations in the markets, looking at something like how stocks and forex products move together. Like for example, when the stock market is moving up, what's going on with dollar yen? When the stock market is going down, what's going on with other forex products? So we'll do some type of correlation. So if you guys want to get in on on the next class, just let us know. We'll make it happen. Other
Or if
than
there's
that,
any topics you want us to cover.
yeah, if you guys have any requests, we can also do that as well. Other than that, we'd like to thank you very much for coming out tonight. And hopefully you guys learned something new. If you are interested, you can always reach out to us, and we can provide you with a lot more information. If not, continue coming, join the Discord trading community, sign up for Ghost Squawk to get some of this functions and features, and learn how to trade better for yourself. Or even if it's not with us, we just want to make sure that everybody is on the path to becoming much better at trading themselves and getting themselves out of that rat race. So nobody has to get up in the morning to take all the snow off their car just to go to work. Yeah, so yeah, Andy, we're trying to integrate all of the classes into this one website, so it will be like a one-stop shop. Obviously, I spoke with you earlier. As of now, like all the content and whatnot, we're trying to do it through Discord. So all the links to the classes and whatnot, you get them through Discord. All the modules through Discord. Eventually, we want to transition that to the website, so you just have to go to one spot. Obviously, it's just myself and Daniel working on this, and we're working very hard to make it happen. Aside from trading and doing this, it's taking us quite a bit of time. So we're a little bit slow, but by all means, it is coming. Uh, it will be refined over time. It will get better, and yeah, we'll make it a service that you guys will really want to sign up and use. Okay. So yeah, any last words, Daniel?
No, I mean, basically today was a pretty good day because I was able to finally finish this product and get it out there. And I'm really hoping that you guys are going to get something out of it. As you see, it's not the prettiest thing, but our goal is to get you guys profitable and help make you guys money. Right. So I took a lot of sacrifice for all the little bells and whistles
Yeah.
just to try to get you guys material that is going to help you to be a better trader.
Perfect. So yeah, one last thing. Our new 12-week trading program is starting on December 3rd. We have changed the time for the program to start at 8 p.m. Eastern Standard Time, just so that we can accommodate everybody. It is a 12-week trading program with classes taking place on Tuesdays and Thursdays from 8 to 10 p.m. Over the course of 12 weeks. You'll get access to features like Ghost Squawk. You'll get access to the Discord trading community, as well as market analysis and shadow trading with myself and Daniel throughout the program. And you'll also get us teaching you the classes depending upon the topics and whatnot. So if you guys are interested, please let me know. You can always shoot us a message to get more information. I'd like to thank everybody for taking their time coming out today. We really appreciate the everybody coming out and the feedback. And again, we just wanted to create a service that was useful for everybody and that can help everybody get on the track to success. So with that being said, I wish everybody a good night, and hopefully I'll see you guys again next week for another session like this, or if not, you can join us for the program.
Thanks, guys.
Okay, so yeah, have a great one, everyone, and we'll catch you all later.
Guys, have a good night.
Have a
Thank
good
you.
night.
Bye bye.